Hello, everyone. Sorry, I was still muted for some reason. How we all doing tonight? Can you guys see my screen as well? Let's make sure. Awesome. All right. Well, we'll get right into it. No need to mess around. And as we always do, we're going to start on a daily chart. Now, what are your important levels on any given day, right? Yes, we always talk about session highs and lows, but it all comes down to one very simple thing. Every single week, every single day, I'm looking at the previous X highs and lows. So, for example, I'm looking at the previous day high and low. I'm looking at the previous week high and low. And I'm also looking at the previous session highs and lows. This is how I frame every single one of my trade ideas. Now, as we said earlier this week, right, in the weekly outlook, I am bullish, was looking for higher prices. These relative equal highs are a great objective for me, even though there is currently divergence. Now, we just took out previous week's high. So we're going to see that level as well. Let me mark it out as such so that once we go to our lower time frame, not previous week low, previous week high, we'll be able to see it nicely. And if we look also clearly, we have previous day low, which I'll make a little bit less width so it's easier to see, and previous day high. Now, looking at it on a daily chart, you might think, oh, I hate saying this out loud. Oh, CRT, look, you took the last candle low and high. Sure, that is a framework, a very low probability framework. But in this context, as we said, what were we doing? Well, we don't have a clear daily range at the moment. Because if we're going to be utilizing this specific range, there's no discount and efficiency in close relation to price, right? I'm very bullish. We're almost at the objective, so I'm expecting price to run to that objective very quickly. I'm not anticipating a deep retracement. So because it is unclear on the daily, I go down to the 4 hour, right? And this is where we'll also refer to 4 hour ranges. What do we see? Well, we have the same range, of course, right? If we look specifically, we were trading within this very specific range with the previous week's high to frame all of that. I am just going to go in replay mode very quickly so that we don't see the PA that just started now with our 6 p.m. open, but we retraced into a discount and efficiency. My students will tell you, and a lot of people have gotten familiar with this very specific logic recently, but this is a move where you retrace to a discount, first of all, and to a discount and efficiency that we are clearly respecting, right? You could see that from last week specifically. So from this move, from this reaction, from this discount, our internal range liquidity, our first discount and efficiency, I understand that price is going to be moving higher towards previous week high, which in this very specific context is the external range above the external liquidity above our range. Now, we also had the same level on ES, which we have yet to find, right? A lot of divergence going on at the moment. That is not a problem for me, right? Whenever we see higher time frame reversals, especially with the charts basically so far apart, right? With ES being all the way up here, it is okay for ES to slow down, give some time for NASDAQ to catch up, which is how I'm interpreting the current day's divergence. What did we see? Well, we'll have to zoom in for this one, but we can see that we took out previous day low on NASDAQ. But if we look at the same exact level on ES, we did not. Right here, let me just mark it of the same style. We did not. So what is that? Well, that's very clear, bare bones SMT, right? And with a lot of divergence. And if we look at this candle right here, what is this dotted line, this level? Weekly open. So after consolidating, we have manipulated with higher time frame SMT, revisiting the weekly open. That is what I speak of when I say low of week candidate. This is a concept that if you've been coming here for a while, you are now very familiar with, or at least hopefully very familiar with, right? SMT at a key level in price in relation to premium and discount, which can be framed from the week's opening price in this very specific case, gives you everything you need to anticipate bullish prices. Now, as I always say, we do top down because every single one of my trades is from a top down analysis. I trade distribution, daily expansion. I'm not looking for the small 1 minute move, retracement that lasts 10 minutes. That's not the type of move I am interested in. I am not a scalper, I am an intraday trader. So now we'll go down to the 15 minute to frame these ideas based on the daily's movement. And if we look more specifically, let me just again go back into replay mode so we can see clearly. If we think more specifically, what did we have today? Well, we had news, and I don't want to be mistaken, but I believe it was at 10 a.m. Yes, all right. It's been a bit since this morning, but if we look right here, 10 a.m., and we frame this as news, what does this mean for me specifically? Well, it means that I'm not trading before 10 a.m. Now, I have very specific rules that allow me to trade before a specific news event. Those rules have been outlined multiple times. If there are some new people in here, I wouldn't mind linking the specific YouTube video, which I went over it. But if you want, it's on my YouTube channel. I believe the title is When to Expect News to Be Expansion. So very straightforward title to get the point across. But I will go back over it just very quickly. What do we need for us to allow ourselves to trade before a news, right? To look for setup before news. Of course, I'm saying that because today there was one. Well, we need a very clear Judah swing at 9:30. Again, same thing as we just looked at with the low of week candidate. We are looking for Judah swing, so a move in the opposite direction, whether you want to call it a manipulation or a Judah swing, confirmed by SMT at a key level in price. Now, that did not happen for me today. I was having this talk with a friend today, and because we induce and formed these equal highs at 9:30, that's not a clear Judah swing for me, even though all the other criteria are present, right? There is SMT at this level with this being exact price and also 9:30. Sorry, guys, 9:30 opening lower. There is no clear Judah swing, right? We didn't take out any sort of important liquidity. I would have liked to seen us probably take out this whole specific high. And now I do have a green level here, which is marked out as previous day high, which was taking during London. So I'm going to remove it just so it doesn't get in our face. But previous day high here, previous day high taken during London. Now, utilizing the very same logic, right? I just want to say, so for me, there was no way to trade that short. I do want to say it because I did have some people and some students too that were seeing these trades, well, these setups, right? I'm saying these just because there are a lot of breaker blocks you can utilize here, but they all align with this very specific fair value gap. They saw this, they thought it was beautiful. Truth is, the delivery was, everything was nice. But on a live account, I'm never going to be able to trade during news. And if you're trading Apex, you're never going to be able to trade during news. So these are conditions where I cannot have profitability no matter how I trade just because I can't, right? And yes, there were smooth edges below, right? There were clear equal lows that were a very big objective. But for me, I was looking for manipulation lower to then go higher. And as you can see, that was the more profitable move on the day. So yes, you're missing out on a possible short opportunity, but as I said, my goal is to trade daily expansion, daily distribution. I'm not looking to take part inside of the manipulation. Whenever I see price forming a range like we have today, right, just engineering liquidity, so inducing at the lows, right, we took out liquidity at the highs, but now returning to the lows, this to me is just engineering liquidity for a manipulation move. Right, that's why we'll go back in the 15-minute in a second here. Well, here actually we'll go back right now. I don't want to add an indicator. I want to reset chart view. So I didn't want to be precise, but what did we do here? Well, we formed equal highs. We're inducing liquidity. So this is additional confirmation in my book for any sort of long ideas. So from this point on, I'm looking for a long. What do I need for a long, right? How do I decide where in this almost 200-point move do I start looking for a long so that I don't get stopped out 2,000 times? Or it's very simple. Whenever we reverse, I need SMT. So that's step number one, right? And if we follow along, there was probably some 1 minute SMT here. I believe I even remember there being 1 minute SMT on one of the retraces within these candles. All right, I was there live, right? But my second rule is that I also need an important level of liquidity to be taken. Now, what is an important level of liquidity? Session highs and lows. As we just discussed, also previous day high, previous day low, previous week high, previous week low, and also equal highs and equal lows, which I understand are important liquidity pools. There's a lot of liquidity resting below these levels. If we look at our equal lows, and why am I choosing these ones, relative equal lows, instead of these ones? Just because they're all in close proximity. If price is going to trade here, I expect it to take the extra 10 handles and go take out the rest. This is how I also interact with take profits. I've said it a bunch of times. So for me, until this low was taken, there was no possible long idea. And afterwards, there was no SMT at this level. And yes, I'm looking only at a 15-minute chart, so we'll dive down to the 1 minute right after. But currently, there was no SMT right up until we kept going down to previous day low, forming SMT between the assets. And as you can see, this is what formed the low of the day. I am spending a lot of time here, right? We're like, what, 10 minutes in, and all we've talked about is the same thing. Key level SMT at a specific moment, right? And the reason why I'm speaking about that is because everything that you can trade, every single market move can be framed with these specific rules. As you can see, I just established my bias, right? Possible low of week with the SMT we had and bias going higher. This was used with what? SMT, key level, premium, and discount. This is another concept that I use on the higher time frames. Now going lower, I frame the potential low of week. I frame the potential low of day. I look for a potential New York Open Judas swing, 930 Judas. At 10 a.m., I'm looking for the same thing, manipulation SMT reaction at a key time. This is all the same. I'm just using it fractally. So every time going back in time frames to gain my understanding, to gain the edge, utilizing the same exact concepts. I didn't want to frame it out because it is truly that simple. Now, you also had a London framework, right? Because we did head on and take out London lows overnight. And so you would expect London highs to be an objective for the current day, but with previous week high at this vicinity. And we also had, as I stated, the equal highs that we formed at the 930 open. These were the clear objectives for me. Now, if we go down to the 1 minute and start looking at this price like down, as I said, I wasn't looking for any longs right up until that level was taken. These are our relative equal lows formed from the overnight trading. Now, from this point on, there is no SMT, but if I look in the 1 minute, I'm pretty sure I can find some SMT somewhere. Let me just check. Probably here, right? Yeah, exactly. So there was SMT here, right? So you may ask, okay, well, now you have everything, right? You have your higher time frame understanding. My bias was long. You have your narrative. Okay, we took out an important level of liquidity. There is now SMT. We are within a key time, which for me at this point would have been the opening range, right? At this specific point in time. Just New York session can be that simple, right? We are within the silver bullet. We understand it is a time with very volatile moves. I am ready to trade. But what do I need for an entry? With the specific Rise model, I'm saying, right? Because there are plenty of models out there. There are plenty of ways to trade. But for me specifically, with my model that has been found, right, that all my model is based on data. And that data has the goal of providing the best consistency. Now, if we look specifically, did we form a breaker block? No, 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 no. And we started diving deeper. From this point on, my idea is not invalidated. This SMT is. But we have other SMT, as we saw, right? With NASDAQ taking out previous day low, well, ES keeps this level untouched. I don't need it to be local SMT, 1 minute SMT right next to my entry. I like to see it, but I don't need it. So there was divergence, which we invalidated, but there was no entry signal because there was no breaker block. No matter where you look, even if you look on ES, which was the stronger asset, it did not form a bullish breaker. Up until we traded back above this specific range. Now you might say, oh, well, these two levels are equal. I don't care for that. I really don't mind if they are equal. Why? Very simple, because sometimes on ES they'll form equal, but they'll be a swing point. And sometimes it's going to be the opposite. NASDAQ is going to form a swing point, and on ES they'll be equal. So as long as the other asset has a swing point at that specific time I'm looking at, I'm willing to consider it a breaker. And this is only specifically when I see equal levels. But again, is that the easy breaker to spot? No. So let's go look at the easy one. Well, let's look at our movement. We formed a low here, then it's expanded to a high. We broke that high here. So technically the move is not here. And I'm not trying to basically draw up, down, up. So my range is here. Then we manipulated. And from this point, we traded back above. Which means that my breaker range is this whole move. And I'm then looking for the last up close candle within this range. And it is this specific candle to be my breaker block. If I just want the right colors, sorry guys. Then I'm looking for an overlapping PD array. Now you had multiple options here, which you don't get often, but the truth is you're always going to enter on the first one. And this was a tick difference. So for example, if a student would come to me and tell me that he used the inversion fair value gap that is right here, instead of using the fair value gap, I'd be like, this is fine, right? You're going to be all right. But just from this, we can see fair value gap below overlapping with your breaker block. Inversion fair value gap, same thing. Also bringing additional confluence that we inverse this fair value gap. This is telling you, okay, well, we're disrespecting bearish arrays. We could be going higher. Now, if we look at the entry on the fair value gap, where's my stop loss? Same thing as always, right? 3 PD array invalidation rule. You have your nearest PD array, which is your entry PD array. Then you have your inversion fair value gap and the other fair value gap below. You want to allow for your stop to trade within these 3 inefficiencies, but not invalidate any of them. Which means what? Well, my stop will be below the low of this candle because it is my fair value gap candle. Giving you a quite decent stop for 23 handles. We just didn't have the most volatile day compared to recent price action, but you should never be disappointed in a, what is that, 350 handle? Oh no, 260 handle range on the day, right? It is a great range. It is a great day. A lot of you guys probably got in this long and had a great result with the day, right? Now that you have your entry, now that you have your trade, you have to establish one more thing, right? Because we have our draws on liquidity, but I'm never holding this trade all the way up here without ever taking money. Why? Because that is not good risk management in my book. Good risk management includes paying the trader, right? Because I might be right 90% of the time, but what about that 10%, right? I still want to get paid on that 10%. If on that 10% of the time, I am 50% right, which means that it goes, let's just call 10 a.m. open half, even though it's not exactly half, but let's call this half. Let's say that every time I lose, half of my losses, I could have closed the trade and profit at 50% of the distance. Well, that doesn't tell you that you should hold up all the way to the end. That tells you that you should always take profit at half the distance. So for me, even though I have a clear objective and I was very confident that we were going to head towards previous week highs specifically, and of course short term going for the equal highs, London highs as well, I am still looking for partial and I have mechanical rules to establish those. Now I'm going to look at the range. Which range am I going to be looking at? Well, the range we're looking to reverse, which is from 9:30 open to the current low, I'm calling the low of day, or the low at the moment, right? You didn't have to call it the low of day. That is my opening range. That is the range we are currently trading within. I'm trying to reverse. If you wanted, you could have also utilized the current daily range, right? So just utilizing the whole daily range, because I'm framing this entire downside move to be manipulation, right? Truth is, I'm going to refer to the most recent range, which is this one specifically, but we'll look at both take profits that I would allow. Now, my rules for take profit is very simple. I look at the first premium inefficiency in a 5-minute chart. So I head to my 5-minute. I see that there is no close inefficiency here, but if we start looking to the left at the first inverse fair value gap right here, It doesn't have to be an inverse fair value gap, right? As I said, I'm looking at the first inefficiency in premium. I have a very clear partial level. Now, taking into consideration also power of 3, right? Your 10 a.m. 4-hour candle, I would like to see us flip that 10 a.m. open. But if we head towards it and reject it, I'm expecting a bearish candle just because of how aggressively we opened. So this could also be a very nice partial objective. And of course, afterwards, it's all about objective and runner and possibly letting it go on higher. You guys probably saw in chat, I closed around this level. I don't want to bust my consistency target on Apex before I can get to that payout that we're going to have at the end of September. If you use the bigger range, it's still the same rules, right? So 5-minute first premium efficiency. So it is the same objective. That's how you know you're right, when everything aligns in the same way. Whenever I take a trade, I look for distribution. No matter which concepts I utilize, they will always tell me where it goes. That's how I know that I can draw up any standard deviations and they will align with my objectives. Because my objectives are not based on, how can I say it? They're not based on bullshit or someone said that that is good. They're based on data, backed by my own backtesting, of course, but also mechanical backtesting. And as you can see, 4 standard deviations aligns beautifully with previous week high, utilizing the breaker block standard deviations. You can also utilize manipulation leg, which gives you your equal highs as the reversal range. But as I've always said, for objectives, breaker block standard deviations will always align better. They are higher probability. You can also use just your specific breaker block, and then you see that your partial aligns beautifully. Basically, what you want to do and how I utilize these breaker standard deviations when you have a large range and just your range that formed your final 1-minute breaker, I see this as short term and this as the entire move. So I utilize the big range for the entire move and I utilize the small range for just short term. So for example, as you can see from the results, short term, I had my partial and I had 4 standard deviations that was actually just under the high. Well, actually quite a decent bit away from the high of this range. 16 handles. So decent alignment. But these levels align with the reversal range from my big, my longer term. Let's just call it longer term, even though it's not long term, but longer term deviations for the entire move. And as you can see, we just busted through that reversal range, busted through 4 standard deviations all the way to the equal highs. Barely had any retracement into here. I was trailing my stop super aggressively all the way and definitely did not stop once to look back. Do we have any questions? Because as always, am I going to consider any sort of other moves? No. That was your move for the day. Or maybe you were bearish and you decided to trade before the news and you got a short. Or maybe you got a piece of a short within this price leg. I don't know how, but maybe you did. But truth is, you had your daily distribution. My model is about trading daily distribution, daily expansion. I'm an intraday trader, as I said at the beginning of this. So am I going to consider any sort of other moves? No. When I have my daily expansion and I caught my piece of it, I'm done. That's my day. That's my results. That's my P&L. And I'm quite happy with it. But yeah, as I said, do we have any questions around the setup? And of course, it was quite a material heavy review here. But the truth is, it's all the same concepts, just repeated. SMT, key level, key time, unicorn entry, mechanical, objective, all based on a higher time frame bias that is established with the same rules and understanding premium and discount of higher time frame ranges. Seems so simple when put out loud like this. Of course it's hard, but these are simple concepts that are hard to execute upon. I'm not seeing anyone type in chat, so I'm guessing everything was all clear tonight. So weird. Sometimes I have 1,000 questions. Sometimes I have 0. So I can never gauge you guys. See if it was a good day or a bad day or pretty simple day when we look at price, right? Truly. But still waiting. Basically, all you had to do is wait for news, as we always do, and then just long the first bullish breaker you saw. And that's what we did. Seeing a few of you guys chat, gonna give it a sec, see if those were questions or not. But if not, we're gonna call it a day. You're trading tomorrow without news. So in this week's outlook, I was probably looking to trade tomorrow, just because of how the weekly profile is. I did anticipate that tomorrow would be expansion, but with a beautiful day like we had today, and the fact that we just hit my higher time frame objective, I do anticipate a continuation higher. That is my bias, right? As we talked about in the weekly outlook, my bias is these equal highs above, and of course, previous month's high, just for NASDAQ to catch up to these levels that ES has already taken. If I just center it, that ES has already taken. But basically, I don't anticipate tomorrow to necessarily have to do that specific level. So no, I will not be trading tomorrow just because I had such a great day today and we hit previous week's high. I'm gonna let tomorrow give me some insight that I can use on the more volatile days of the week that are to come with Thursday and Friday. Do you have any tips to increase consistency? Yes, very simple. It's called backtesting. Not no replay trading or anything like that. You want to improve your consistency, you have to understand your model. No matter which model you're trading, you have to understand how it works in what conditions. Because at least for myself, the way I gain consistency is by knowing when not to take a trade. So if I trade my model blindly, it is profitable. But if I want to make it more profitable, I have to be able to say, you know what, this is a setup, but I don't want to take it. And when you give yourself that specific role, right? When you give yourself the right to say, oh, you know what, I'm not taking this trade. Well, be careful to not fall into the abyss of saying, oh, well, this one isn't perfect, so I'm not going to trade it. And then you're going to start missing out moves. I actually have one of my students who is straight in that problem right now. He gave himself too much right to skip trades, which means that now he's just missing out on all the moves unless they're absolutely perfect. But the truth is, sometimes they're perfect and you lose anyways, right? So this is a sketchy path to go down, but that is how you gain more consistency. Truth is, just be happy with what you got. You want the best exercise you can do? Think in your mind. Imagine you have 50% consistency, and I'm speaking on the end of the week. So you have 2 winning weeks, 2 losing weeks per month. Your job is not to try and make that better. Your job is to manage your risk around that. Your job is to make sure that your winning weeks are bigger than your losing weeks. And I'm not saying make 10 grand on your winning weeks and lose 1 grand on your losing weeks. I'm saying keep that 2 to 1, right? Win 2 grand on a winning week, lose 1 grand on a losing week. Keep your risk small. And when I say lose 1 grand, I have in mind that you're risking $250 and you have 4 shots. And basically with my model, it's basically an impossibility that you lose first 4 trades in a row, talking purely statistically. So for me, you would have had way more than 4 trades that week if you end up with a losing week. And there's a lot of human error to associate with that. But just to be precise, I'm saying let your risk management do the job. Stop trying to always be better. First, learn to make money, then learn to make more money, I guess. I was hesitant to take the same long at the same breaker, but there was 15-minute minus fair value gap above. Do you pay attention to 15-minute fair value gaps? Always, because that is my intraday time frame. Those are my intraday moves. But as I always say, I don't care about the inefficiency unless it's in premium. We had a little Discord bug here. Hello, can you guys hear me? Our stage just crashed. That is the first time that happens. All right. Well, I'm going to get back to answering your question, Jez. I apologize for that. That never happened to me in Discord, so that's fun to know that that can happen. But what I was saying is that I don't care for any inefficiency at any point in time unless it's in relation to premium and discount. So for example, in this specific case, if I just here, let's clear out the drawings. If I'm going long here and I'm scared of this fair value gap because I'm like, oh, well, this fair value gap could distribute price lower, right? Could push price lower. Well, I don't care about it for one very simple reason. It is not in premium. So I don't care about a bearish fair value gap that's at equilibrium. I anticipate that we will inverse and invalidate that no matter where we are. So the one I care about is this one, my first premium inefficiency. And as you can clearly tell, it was invalidated. But truth is, if you guys remember, and I'll actually plot it back on the charts, my partial was way before this level. My partial was here. So I had the time to take out money. And as I always say, even when I'm wrong, I'm still right because I'm still making money. If this move higher was just a retracement, right? It would retrace where? To the first premium inefficiency, which is in this 5-minute time frame, which is right here. Which means that I can at least take a trade and, well, for example, if we did not distribute higher, but this move higher was just a retracement, it would at least go there before continuing lower. That is where my whole frameworks come from. So I hope that clears things up for you. But anytime I'm looking at the 15-minute, I'm looking at intraday moves, which means I'm either looking for a retracement after a daily distribution. So for example, looking to short a retracement here, which as I said, I would not have just because of all the movement we already have done and the fact that I was part of this move. And well, or I'm looking for reversal and I'm going to use these PD arrays to confirm my idea. So for example, I'm here long and the invalidation of this array is going to make it so that I will hold all the way to the highs of the range. Does that make any sense? Awesome. Do we have any final questions before we leave it at that? All right, not seeing any. Well, I wish you all a great night. As I said, I won't be trading tomorrow. There is no PA review tomorrow, but we'll see each other back on Thursday and Friday to review the price action of those specific days. Good luck to you guys trading tomorrow and have a great night.